And Fed Chairman Bernanke also indicated at Jackson Hole that the Fed would continue to hold interest rates at near zero and that this was unlikely to change before 2014 at the earliest. Meanwhile, Australia's Reserve Bank has decided to maintain its interest rate at 3.5%. This is the highest benchmark rate among major developed economies. The governor of Australia's Reserve Bank says domestic demand has managed to help the country weather the global slowdown. Well, joining me to discuss global central bank action is Daniel Hanson, economist at the American Enterprise Institute. Dan, thanks for joining us again tonight.
Thank you.
Dan, let's start with Australia. Obviously, it's been impacted by China's growth slowdown. What do you make of the decision to hold rates steady at 3.5%?
I think the Reserve Bank is looking around the world and they're seeing that other central banks have sort of run out of bullets, but that there's still substantial downside risks to come, that there's still economic collapses that are coming in both China and in Europe. And because of this, they're trying to save their bullets. They only have so many bullets left and they don't want to fire them all at once, especially if things are about to get worse.
So they're hoping that they don't get worse, but in case they do, they still have room to act there.
That's right. They've looked at China and they've seen that the slowdown has been both sharper and faster than they thought it would be. And they're worried about where the bottom is actually going to come. So they're holding their bullets for now.
Well, Australia's Reserve Bank holding its bullets, but what about Bernanke? I mean, what weaponry does he have left? And do you think it's likely that he will pull the trigger on quantitative easing 3, QE3, potentially announce that in September?
Right. It seems like the Fed has done a lot of work to lay the groundwork for QE3. They've been hinting, at least for a meeting now and at the Jackson Hole summit, that it's something that might be coming. It seems likely right now that the Fed's greatest policy tool is actually just the power of suggestion. That is, if they sort of suggest that they're willing to take action, that they can do more.
Right, the markets are just moving on the hopes that the Fed will act, so why bother acting, because it's getting that stimulus action anyway.
Exactly, and that game can only go on for so long, but I think the Fed is a little bit worried. They have injected trillions of dollars into the economy through various asset purchases. They've manipulated the yield curve a lot, and they've produced some short-term results, but they haven't been able to produce the sort of prolonged change in real economic variables like unemployment that they're really trying to look for.
So we're really seeing a disconnect, if you will, between monetary policy, financial institutions like the stock market, and the real economy, because the Fed keeps on injecting more and more stimulus, taking more and more action, but unemployment remains stagnant at 8.3, consumer sentiment hasn't changed. So what can the Fed really do anyway?
Well, the Fed's caught in this classic Keynesian-style liquidity trap where they're unable to actually produce these changes in the real economy because there's so much liquidity available that they don't know whether there are shortages in certain aspects of the economy that are looking for more funding that they can't get. And so until that situation can be resolved and some of the other fundamental underlying problems can be addressed, the Fed is going to be stuck somewhat impotent in fighting these problems of unemployment and the growth slowdowns that we're encountering.
Well, Bernanke said he would act if the conditions continue to worsen. So how bad does it need to get before he pulls the trigger on QE3 or Operation Twist again or whatever they may have in store?
That's right. Well, the Fed is running out of things to buy. And so I think we're going to have to see a pronounced increase in unemployment or a pronounced slowdown in
What number is going to spur action here?
Maybe if we crossed into the 9% range, I think, we might see the Fed start to get a lot of outside pressure, as they're already getting, to act, and to act more decisively than they've been acting over the last few months with Operation Twist.